Hi, and welcome to the Financial Edge. For me, I am Lou. Today, we're going to talk a little bit more detail into, improving the credit score. So there are methods that you can do to actually improve your credit score. I made a video about that was very short, but this video will be a little bit more detailed and tell us a little bit more about exactly what I mean when it comes to the terms and about improving your score. So one of the things was paying your bills. Pay your bills on time. Why does it matter? Payment history makes up 35% of your credit score. Late payments, even by a day, can harm your score significantly. How to do it? You can just set up a automated payment method. That's the fastest, that's the easiest way of doing it. So that way you don't have to worry about going in and making the payments, reminding yourself and stuff like that. No, it just automatically does it for you. Hell, we got the technology here. Why not use it? So, even if you do like a partial payment, it's better than, no payment at all. So, that's a good thing to do. Just pay your bills on time. Two, keep your credit utilization low. Your credit utilization, which is the ratio use credit versus available credit, accounts for 30% of your score. High utilization suggests financial stress. So then if they give you a credit line of, let's say, $2,000 and you spend up, a large portion of that, they might look at that as a strain, and that you're using all the resources that's available. So don't use up all your credit line. You got a $2,000 credit line, just try to use maybe, 20-30% at the most, at a time, So aim for utilization below 30% or even better. 10% is even better. And then pay off your balances frequently in multiple payments per month. That will actually help too. You check number 3, check your credit reports regularly. Errors like incorrect balances or accounts you didn't open can actually damage your score. So how to do this? Just access the free credit report, offered at annualcreditreport.com. That's annualcreditreport.com. And review reports from all 3 bureaus. The bureaus which are Equifax, Experian, and TransUnion. And dispute any inaccuracies. So anything that's wrong or whatever, dispute it as fast as you can. 4, pay down high balances. Why does this matter? Carrying a high balance on credit cards or loans, shows signs of risk to lenders, and it can negatively impact your utilization ratio. So use strategies, like the what they call the debt snowball, which is paying the smallest balances first. The debt avalanche, which is paying highest interest debts first. And this is to reduce balance efficiently. So number 5 is increase your credit limits. Increase credit limits. Why does it matter? A higher credit limit lowers your utilization ratio, provided you don't increase your spending. So yeah, you can have try to increase your credit rate, your credit limits, increase the credit limits. So if you they have like 2,000, say, submit and try to get a raise of 3,500. And when you do that, that will increase your, of course, that increase your limit, but then it lowers your utilization ratio. But don't spend the money. Don't go in there and just spend it too. You increase it for a good reason, but don't go in there and spend it either. And, what you do is contact your credit card issuer and request a limit increase. Ensure you've demonstrated responsible, credit behavior, before asking. So, that you've been paying on time like you're supposed to, for, let's say about 4 or 5 months, you've been doing that, or a year, even better, then they really can't dispute that very much. They're going to say, hey, wow, look, they have been, doing pretty good, so let's go ahead and increase the ratio, increase the credit limit. Number 6, avoid opening too many accounts quickly. Why does it matter? Each credit inquiry temporarily lowers your score, and too many inquiries suggest desperation for credit. So if they're looking at you and they say, you got too many credit cards open, that's not a good thing. You don't want to do that. So you want to space out applications for new credit and research eligibility requirements to avoid unnecessary denials. Because they will deny you if you got too many credit cards and stuff like that open, which is, it makes sense. I wouldn't want to give my hand out and give money to somebody that's overreaching. They got too much money or too much credit on them. So let's go to number 7, which is keep old accounts open. So why does it matter? So it's like the length of your credit history makes up 15% of your score. Older accounts demonstrate long-term financial responsibility. So even if you don't use an old card, you should keep it open. Use it, probably use it occasionally, for small purchases, to prevent, issuer from closing it due to inactivity, because they can do that. But having that old account will be of great, help to you, in improving your credit score. Number 8, diversify your credit types. So why does it matter? A mix of credit accounts, such as credit cards, car loans, mortgages. This shows lenders you can handle different types of credit, responsibly. So you don't want to just have all credit cards, or all, car loans. You know what I mean? No. You want to try to, diversify, make it, a spread, between all of them. So don't take out loans unnecessarily, but consider adding a small personal loan or secured card to your credit mix. 9, settle collections accounts. Why does it matter? Accounts and collections significantly harm your score and flag you as a credit risk. So you want to settle those accounts as fast as you can. So what you would do is you would contact the collection agency to negotiate a payment plan or to settle the debt. Because they could probably take a payment plan from you, so it won't be the full amount due at once. So if it's $1,000, they might say, let's spread it out for 4 months or 5 months. And that, so you divide that by the 5 months, and that's what you will pay. You can request a pay for delete agreement upon doing that, where they will remove the account from your report upon payment. So that's a good way to get that settled as quickly as possible, and and get back on a good financial standing. Number 10 would be become an authorized user. Why does it matter? Being added to someone else's card as an authorized user can boost your score if their account has a positive history. So you don't want to go on someone whose credit is already messed up, become part of theirs. You want to try to, get to someone that's, been handling their business pretty well with their credit, and then, become an authorized user. Such as, maybe you want to ask a trusted family member or friend with a good credit to add you. You don't need to use the card. Their responsible behavior will reflect on your report as well. So even if you're not using the card, which hopefully you won't use it, just the mere fact that they have it and their credit is great will help your credit get better as well. Well, that's it, for this video. But, just a little bit more detail as for, improving our credit, and boosting our credit rating, a little bit more detail into that. So you might want to take into consideration, run the video over a couple of times. You have to get a full understanding. But, yeah, it can be done. You definitely can, boost your credit score by using these tips. But thanks again. Subscribe to my channel. We're going to try to do, a video, probably at least once every couple of days. If not once a day, that'd be nice. And, this is what we're going to do and try to, increase our, knowledge of finances. Well, thanks again for coming to The Financial Edge for me. My name is Lou. Thanks again. I'll see you next video. Have a good day.